It feels like, Joe, from my perspective and others too looking in, they're struggling to find the right balance. These companies have gone from being understaffed to overstaffed, undersupplied to oversupplied. And, Joe, all of a sudden there's all this inventory and they don't know what to do with it. Joe, how do you find the right balance in an economy moving this fast?
Yeah, and I think that's really the challenge, and something actually Doug McMillon talked about yesterday was the speed of all of this, that it's really hard to adjust the business that quickly to play some catch-up. Obviously, the consumer's moving and changing quite rapidly, and I think you're right. I think that, the retailers, we saw this with Amazon too, where they kind of were building out to the capacity that they needed at the time during the height of the pandemic, and now you're seeing some of the give back. What's really interesting here is if you go back in history, Target's gross margin has been very stable at right around 28%. Obviously, this quarter, it really dropped a lot to 25.5%. And their guidance for the year would imply that it's going to be certainly well below the 28, maybe more like 25, 26. I think that's transitory. And I know the stock's down a lot right now, but if you kind of really look closely at that line item and look at the way they're operating the rest of the business, there's a lot of pressures right now on the supply chain, on fuel costs, on everything that's just hurting the business right now.